Yeah.
What's up, YouTube? How we doing today? Welcome back to another episode of the Traders Podcast. We have a great guest on here today. We have got the author of the AMC $2,000 price target, umu68, writing up that awesome freaking DD. I could not find. I tell you what, we talked about this in the AMC Discord that I'm a part of, trying to find some sort of flaw with this, and I couldn't. And I just thought to myself, man, we've got to get this guy on, this freaking genius, this 22-year-old wizard. Man, you got to introduce yourself. How are we doing today?
Not too bad, man. It's just peachy, man. Just ready to go and hopefully help people around with all the fun that's going around. Fear, uncertainty, and doubt for those that don't know. Yeah.
I'm so glad you disclosed that. We like to keep it in a nice, plain, simple ape language. I appreciate that, man. So just so everybody knows, we are most likely not going to be reading off Super Chats until after our guest has gotten off of this live stream. So if that is a problem for you, just make sure that you either A, don't send them, or B, understand that we won't read those until the end of the live stream. And also, we are just doing a Discord call because we want to keep the privacy of our guest at a maximum. So we will not be revealing his face. He does want to stay disclosed. So that is why we do not have the camera up here. But guys, we're going to be jam-packed full of information. It's going to be a nice Joe Rogan podcast style conversation. Very excited to get this going. So tell us a little bit about yourself, man. Let's hear your background. You were just talking about it with me before we started this call.
My background is in physics. I got a double degree in physics and astrophysics, and I just started dabbling in the financial markets last year. I was trying to make a garage hedge fund based on some artificial intelligence I developed, but that didn't work out because GME and AMC kind of blew me.
Yeah, right.
But that's a good thing. That's a good thing. I really do like this phenomenon that's going on. I believe in the value that people will be making out of this play, and I believe in the people that that are buying this in, and I believe in the power of the internet, man. So I'm all for it.
Rock on, man. That's sick. So I can't believe you're 23 years old. We were talking about this before. We're the same age. The 97 babies, the year of the ox. That lines up way too well for the Bulls.
Yeah. We've been going crazy, Crazy.
Rock on, man. Well, let's just get into the meat and potatoes here. We got some people that are freaking excited. Andrew Momoni in the house. Thanks for stopping by, man. Let's dig into this first DD, the inevitability of AMC 2K based on current market data and current market behavior. So we can dive into this DD section by section if you'd like to do so, and we can just get your opinion. How do you want to swing this, brother?
Okay, let's go section by section. Let's start with where they're hiding, which is in the ETFs, right? So,
right.
As we've seen on last Wednesday, there was a huge dip with Apple, Tesla, BlackBerry, Nokia, AMC, and GME all at the same time, right? So my hypothesis was they were shorting the ETFs, right, and then going long on each one other than AMC and GME. This was backed up by their graphs being correlated for basically a month, right?
Right.
Whenever AMC went up, GME went up.
Yeah, they were exactly the same
GME
chart, essentially.
AMC went down, right? Yeah, for an entire month. And now they're starting to diverge because more apes have pulled their attention on GME. And thus there's way more liquidity in going into GME after Keith Gill's Senate hearing, right? So we'll keep that on the back burner, right? We'll address that after, but let's go through the ETFs.
So shared ETFs with GameStop. You want to start there?
Yeah, let's start with there. Let's see. I'll open up the institutional investors, right?
Okay.
And there should be a link. I'm on your live stream right now. Could you pull up that link? It's in the DD.
Did you send it over to me with the PM from Discord?
Yeah. So, one second. It's just let's have everything set up. So here's the institutional buyers.
All right.
So I'll set it over here. And so this is your failure to deliver us phantom shares. All right. So
right here we got the institutional investors in both GameStop and AMC. Hold up. Yeah. BlackRock sitting at the top.
Right. So yeah. BlackRock sitting at the top. And now we have the spreadsheets that more or less confirm it. So I've cross-referenced these numbers off of Fintel's compromised, but before it was compromised.
Right.
Off of Fintel and Ortec, just to make sure I wasn't insane. Right?
So you threw together this Google Docs spreadsheet, this spreadsheet right here.
Yeah, so this more or less summarizes exactly what's going on. I don't know if it's been updated ever since I used it, but it might be higher now.
Okay, so walk us through each of these columns.
Date, right? You had Okay.
The tickers, the GME allocation, GME market value. Right. Go ahead.
Yeah. Okay. Okay. So let's start with all these ETFs. So these are the major ETFs that hold both GME and AMC, right? So as you can see, there's market caps, market values.
Right.
So if you have the match in GME column, that means this ETF has both AMC and GME. So people were on the GME Discord were chatting, and the Reddit were chatting about like the XRT, right? Where they were hiding in the XRT ETF. That wasn't the only ETF they were hiding.
That was one of many.
They had other ETFs. Yeah, one of many. So as you can see, there are like 30 ETFs on the GME tickers.
Right.
And at the proportional allocations are there, right? And that's why on witching day, Reddit started to speculate that GME might be thrown out of XRT. I can't personally confirm that, but I've sent you links that do discuss that prior to this call. So you can go right ahead and deep dive in. But so let's go back to the matching, right? So as you can see, there are metric ton of, AMC and GME like ETFs that match up together. So whenever one's shorted, the other one's shorted as well.
Right.
So what they do, here's how you short a particular stock that's in an ETF, by my understanding. So they go ahead and short the ETF, right, and then go into the individual securities for each ETF, and then they go long. So they stay net short on whatever they want. In this case, it was AMC and GME, right? Because they figured that, hey, apes are throwing cash into this. It's free cash. Why not take it, right?
Right.
And that's where they got over leveraged. So now,
go ahead, man.
Yeah. So now that we've now that we confirmed that this data isn't garbage,
Right.
Now we've confirmed that this isn't garbage. What we can conclude is the short interest from February and March have been piling into the ETFs, right? And this is where they were hiding. And this is where you have the phantom shares coming, the failure to deliver, where they create an oversupply via creating our synthetic shares, decreasing. Well, the demand stays constant because apes held, right?
Right.
But the supply the supply increased via synthetic shares. So you have your price drop. This is where you get your 17 to 5. This is where you have your 500 to 30, right? Because they created a metric ton of synthetic shares to try and short the actual shares,
right,
and decrease the price. And that's when our mystery buyer on February 25th went ahead and, they put GME on the SSR strategically, in my opinion, right? They dropped it from 44.67 to below 40 and then pumped it back up. That put GME on the SSR, right?
Right.
Then the next day, you had the crazy day where GME got jumped up to 100%. It went from 40 to 90 and then 250 after hours. They had to halt the trading for the last 15 minutes so it wouldn't close above 150 or something like that. And it was halted 4 times in the day, right?
Yeah, I'm tracking.
So because of that, right? Because of that, we have where we are sitting right now at 250, right? And we were on the SSR for 2 days straight, right? Now, what you do on an SSR is, if you're on it, you have to actually short the stock on upticks with actual shares.
Right. But what about...
Which means whoever is...
Go ahead, man. Finish up your sentence.
So, I'm going off I'm going off topic. We'll address the synthetic shares in a bit. Okay? But now that what I wanted to establish here is that this data, they're hiding in the ETFs, right? And it's been shown that the ETFs have been, piling in, and that's why GME and AMC are correlated. That's what I wanted to establish.
So
that was the whole point of that section.
You think that AMC and GameStop are correlated because of these ETFs, and you've got similar institutional buying stepping into both these ETFs, and I would say short positions as well. So essentially, just match buying and selling in the back end of things where people can't see it. Is that correct?
Bingo.
Right. Spot on the money. Spot on the money. So
yeah. So that's what spot on the money. Yeah. So that's what I believe. Yeah. So like you said, the sellers, or in this case, the synthetic sellers, are the same dudes, right? And the buyers are apes and the same institutional investors. So yeah, there you go. You hit it up to a T. So if you have the same buyers and sellers, you have the same supply and demand, or correlated supply and demand, and therefore you will have correlated prices. And this has been backed up by the month that we've seen so far.
Man, this is spot on the money.
So
this is spot on the money.
Yeah, Yeah, spot on the money. You hit it correctly, man.
So basically what he's saying, guys, is you've got GameStop and AMC, and we're only bringing up GameStop as a comparison, right? We're trying to tell you why these two stocks are trending together. We're not trying to be like, oh, AMC is dead, go to GameStop, whatever. We're just showing you that the institutional investors are kind of backdooring this. So you've got BlackRock, Vanguard, USB Asset. These are all the GameStop and AMC shares held by these companies, right, that are being backdoor bought into these ETFs, right? So long positions and short positions match up with both GameStop and AMC, which describes and explains why they both mirror each other in price action. However, I do think that it is worth talking about why they have differed now as of the last 1 or 2 weeks. Let's get into that, man.
Yeah, so like you said, like the spotlight's been on GME because it's crazy. It just everyone thought it was a dead cat, which it wasn't, right? He still didn't buy a sellout or any of it, right? It's not a dead cat. None of these are dead cats, right?
Not
these
a dead cat.
Very hot stocks. Yeah, so that's the thing. So when Keith Gill doubled down, right, that gave GME the spotlight. And when I'd like to say, I will call our Mystery Institute X, right? So Mystery Institute X, like, lowered the GME to the SSR and then pumped it. Well, they didn't pump it. People saw it wasn't that cat. And since they couldn't short it at the upticks, it went on a wild ride. So you have way more liquidity pumping into GME to get it to this massive, 40 to 250, right? And it was a 360 before, that illegal like price manipulation that happened, right? Where it was everything went down at the same time of that flash crash.
Right. That would have been on March 10th.
40 to 360. Yeah, so 40 to 360. So 40. That's 300.
I think it was almost 40% swing.
So roughly around 900% growth.
Right.
Yeah. So that's from 360 to 178, and then back up to 250. Right. Because of the more liquidity, right? So yeah. So I'm talking all the way back from February 25th, where it was like 30, sitting at a low of 38.
Okay.
So if you pump that up all the way to 360, that's 1,000% gain. That's crazy, right? People will want to buy the stock because it can get way higher, right? The GME subreddit is pushing 500K. And the thing that I think institutional buyers don't understand yet is that there aren't just bulls and bears in the market anymore. You have to, because of the internet, you have to find a new term. It's called apes, right? These people will buy and hold.
Dude, right? That is gold.
Buy and hold.
I like that. Yeah. I like that.
Because think about it. Yeah, think about it, right? So bulls, right? They plan for the future of optimism, where bears, they're like, hey, everything's overvalued, right? Maybe we should regularize and normalize the market, right? Whereas apes, right, they buy at the bottom, right? And they will not sell till they top out. Right?
Right. You're 100% right.
This should be a new financial term. Yeah, this is a new financial term created by the internet. And if boomers don't get it, then, sucks to be them. But I think institutional buyers need to understand this, that since the GME subreddit is pushing GME to 500K, they will not sell till 500K, right? Similarly, AMC, right? I think it could go, like, personally, with a bull case with the mathematics to 2,000, right? People are pushing 1,000. People were not going to sell to 1,000 hits, and hopefully that's now 2,000. But we'll cover why I believe 2,000 is a mathematical inevitability later in the call. But going back to the topic of why GME and AMC have diverged is liquidity. The simple
liquidity,
answer,
right? There's just not as much liquidity getting pushed into AMC.
AMC, because the intention, the media focus is on GME, right? So, yeah, that's exactly why. Like, the magnitude, because if you look at the macroeconomic scales and, like, just compare AMC to GME, they're still very much correlated. It's just the swings are not 1-to-1 anymore.
Right. That's right. Yeah, so you look at the AMC volume. Like, you got 113 million to 250 million getting pumped into the stock. It's a much cheaper stock, yet GameStop gets 71 million, 63 million. So the liquidity or the cash getting pushed into it is just a lot higher for GameStop in comparison. That'd be my hypothesis as well, man. You're spot on.
Yeah, absolutely, man.
Okay.
So now the next step. Yeah. So
dive into the next step. Go ahead.
So what was the next?
You're driving the car, man. We're here for some knowledge.
The next step was. Okay, gotcha. So So we covered why GME and AMC are correlated and why they're not anymore. But we predicted this, right? So in the subreddit, right? So my personal note is that when AMC hits that 25, right, and if apes hold, right, that's a new high. We're in uncharted territory, technically speaking, right? But if apes hold the majority of the float, right, and it is as short as the data indicates and our hypotheses indicate based on the data, this is a slam dunk. Like, simple as that. Like Michael Burry would say, it's a slam dunk.
Grand slam, man.
Right?
Yeah.
It's a certainty, like he said in The Big Short, right? So let's go back to 2008, right? So in 2008, the mortgages were failing, the bonds underlying in 2007, right? But the problem was the premiums were going up.
Right, totally.
Similar to AMC, right? Similar to AMC, that we knew this was a grand slam, but the prices kept dropping, right? Right? The institution, the credit raters and all, they kept saying that the mortgages were solid. Until Bank of America almost went to zero, until Lehman Brothers imploded, until people lost their houses, right?
Right.
This is similar.
They were hiding it. They were keeping it under the table and didn't want to show how bad the game was getting, that they were getting slaughtered.
Bingo.
Right.
Bingo. Same with AMC. Like, people are seeing, hey, it's $11. The media back then was pushing, hey, no, this housing market's solid, right? No need to worry. Same with here. Hey, AMC and GME are dead cats. They've already talked, right?
I love that you keep saying that, man. I love that you keep saying the dead cat thing.
Yeah. Well, they're the ones pushing it, right? So they're the ones who saying it's a dead cat, and then we can see mathematically, no, it's not a dead cat. You're hiding something, right? Like, they hit something in 2008, and people paid the price, and now they're on the other end of the stick, right? The people can finally take their wealth back using AMC and GME. So that's why I love this, right? This is the French Revolution of Finance, as Forbes. You track down the exact article, right? So fact check me, guys. So there was this article where GME and AMC were named the French Revolution of Finance. It truly is. If this guys can hit 2K and GME 5K, well, 500K, my bad. According to the Reddit there. And so in my Reddit, right? So I've listed the sources. So Trey, could you go ahead and go to the point? Thank you for going through the data, right? Could you scroll down to there?
Yes, no problem. So that would be right here. Thank you for going through the data, analyzing this data.
Yeah. So I haven't done personally as much research on GME because it's a lot. A lot of people are working on it too. So I thought I'd go for the stock that people aren't paying attention to, AMC. But these 4 links go ahead and mathematically detail why GME could theoretically get to 137K. Like, no joke, right? And how like, you guys can go through it yourselves, right? This is public knowledge. This hopefully will be pinned in the description, right, of the D&D. But yeah, you guys can go through it yourselves, and just see why it can go to 137K. And people are holding. Like, you guys can check capital.com, right? So if I click on capital.com right now, and after this goes live, people they might get taken down too by like Fintel.
Right.
I think it was like 96-4 on AMC buy sell, right? The buy sell ratios.
That's what I had seen as well. Yeah, I think it was 94-6 now.
Yeah, so 94-6, yeah. And GME went up. It was 85-15. It's 86-14 now. People are holding, guys. People are holding. So regardless of what the media is saying, people are holding. People are not selling out. So yeah. So I'll leave like the GME explanation to those 4 Reddit stuff. You guys can go ahead, read through, tear it up, see if you can find any flaws. But yeah, absolutely. And if you do find any flaws, just comment down there, right? And ask your questions.
So,
but it will take you guys some time. Yeah. So yeah, you first, Matt. You first. You were saying?
No, I was just gonna say, let's get into the numbers behind the 2K for AMC. Where did you come up with? Because from what we've had as a conversation, you said 2K is the floor for AMC, and you think that it can hit 10,000.
Yeah.
So let's go through those numbers. I think that a lot of people would benefit from the why. Why do we think it's going to be worth $2,000 at a minimum?
Right. Minimum. Okay. So the math behind it is a feedback loop based on Tesla and GME. Okay, so what happened with Elon Musk, and this is my personal theory, is that when he put out that tweet that, hey, Tesla is overvalued, right? The price should be lower. Short sellers went, hey, this is our chance. Why don't we short the stock?
Right.
This is guaranteed money, right? And then you have Elon's little Twitter following said, hey, this is when they saw the dip, he's like, hey, this is great value. Let's buy in. And that's when the Tesla gravy train started, right? Where it just shorts kept getting squeezed, more buying pressure came in, more people FOMO'd in, FOMO was fear of missing out. And the price kept going higher and higher and higher till Cathie Wood comes on CNBC and says, hey, no, this could go to 4,000, right? And pre-split, right, Tesla's valued around 4,000 to 5,000 now, right? They're the most valuable car maker, right? So what we saw there was a short selling feedback loop, as I like to call it. Or well, short destruction feedback loop, more accurately, right?
Mm-hmm.
Whereas the price dipped and people kept buying the dip. So what we saw on AMC and GME is people who bought the dip at 550, people who bought the dip at GME 338, right? They're up, right? They're holding, and more people are coming in, creating more and more buying pressure. But unlike Tesla, we have the certain failure to deliver, short letter attacks, and phantom shares, as well as the ETFs, creating way more pressure on the short sell destruction here, right? So let's go through the feedback loop. So are you scroll down to the feedback loop?
I'll scroll down to that now. Yeah, right here. Feedback loop for apes not interested in the math.
Right. So yeah, I try to keep it short and simple. So it started at $8, right? Because that's when I was thinking, hey, this people are holding, people are not selling, right? So apes buy and hold, right? Hedgies went ahead and short via phantom shares, tried to drive the price down. We've seen that, right? They tried to get it down to 770, right? It didn't work. It closed around 10-ish last week. Yeah.
Right. The last couple weeks has gone from 5 to 8 to 8 to 11, from my understanding. You still there, man? Did we lose you?
From this week, right?
Right.
And then apes buy and hold more. Prices increase again, right? And the same cycle begins. Now, what we saw here, there was a massive short level. This has even surprised me when the entire market went down in a flash crash at the same time, which means this feedback loop is amplified. Because I was expecting a short letter attack, just not to this magnitude.
Right. So
yeah.
Let's dig into this feedback loop, man. This is good stuff. So I'm just gonna read this straight from your Reddit, DD. Apes buy and hold, hedges short via SLAs and phantom shares, which is synthetics. That failure to deliver is the options which aren't being matched with collateral. Apes buy and hold, increasing the price and cost of staying short, which causes more options expiring in the money, which causes more failures to deliver, which causes more apes to buy and hold, and this rinses and repeats. It's an over and over and over, which can infinitely rise the price action as long as there is positive and bullish sentiment on a stock. That's my take on that. Is that about what you're getting at?
Yeah. So as we've seen in Tesla, but there are a couple critical points here that are good for sentiment. So this is where I outline. Apes reached 20 because 20 is the previous daily high. Well, daily like open close, right? Because we know on that day it reached like 25 before plummeting, and the short selling began because Robinhood took off that buy button. But we'll get into that later.
Okay.
And that free floating Joe Rogan style, yeah. So
right, man.
The cycle begins to accelerate. Yeah. So the cycle begins to accelerate because a lot of these options, they're in the money now, right? And the failure to deliver starts to compound. Same cycle, apes buy and hold. If apes keeps buying, right, apes will get to 40. The same cycle intensifies with vigor because I believe AMC's highest strike price from back in 3 months was 40, right? Or correct me if I'm wrong.
I think you're right, man.
Right? So that means
I wasn't looking at it 3 months ago. I'm gonna be honest. 2 months ago is when I started looking at it.
Go ahead. So chat. Go ahead and fact check me. Right? Just go ahead and fact check me. So if the cycle goes ahead and intensifies with more vigor, apes get to 80. And this is when the shorts, as we've seen, they've been getting desperate with all the media narratives and FUD going on, right? They become to get hyper desperate, right? the FUD starts, like fear, uncertainty, and doubt starts to spread like crazy. And this is where I believe Vanguard said, stay the course.
Stay the course, man.
Stay the course. Yeah, stay the course. Apes get to 200. Right? A failure to delivers are forced to deliver. This is where the compounded manipulation, I speculate, will begin to explode because 21 days legally, but I think a lot of the people took that at face value. I think it's 21 business days.
I thought the same thing.
A bit more.
Yeah.
Yeah. So 21 so that's more than a month, right? So this would also match up with their timelines. Like, hey, why aren't they covering? Well, legally, they still have more room to go, right? But if they keep going to more, this keeps on compounding, right? And this is when the SEC starts, hey, you got to cover. And this is what we see with the DTC, with that new ruling, right? Where they're like, hey, this is getting out of hand. You got to cover now, right? And then the SEC is like, hold up, right? We gotta, step in. They say they gotta, what was that word? They have 60 days to review the decision. And then it takes 10 more business days to implement.
Talking about the DTCC rule, right?
Yeah, exactly. I'm talking about the DTC rule because we're at 200 right now in that feedback loop, right? So this is where things start to get crazy, right? And you have all these catalysts start to compound at the same time based on the data, right? Based on what we've seen. And then apes get to 500. If apes stay the course here and they buy and hold, this is when you'll see short sellers getting margin call, right? So what's a margin call? By definition, when you are trading on margin, you are borrowing money from the hedge fund, your broker, right, to go ahead and conduct trades. And therefore, you have to put up a bunch of collateral to make sure if you're negative, they can seize that collateral and they're not on the hook for the money, right? So that's what a margin call is. When it gets to 500 and they're this over leveraged and shorts, they'll start to get margin called, which will have them go ahead and sell off their other assets to try and cover, right? This, I believe, will not work because of like the previous catalyst, and it will keep going till 750, right? And it keeps going up, and that's when shorts begin to panic. Margin calls intensify. They sell off even more assets to maintain, satisfy requirements, and this is where we go back to the gamma squeeze. Extreme gamma squeezes start to call into effect because now you'll have call options that weren't viable a couple months ago that come in, the 500 calls that are going to be made, the 250 calls that are going to be made, right? They're all in the money, right? That's when you'll see buying pressure explode and the feedback loops begins to really, really kick in. It's like a positive feedback loop. And that's when the rocket ship launches, right? And the hyper gamma squeezes begin, and you get 2,000, right? This is based on data we've seen with Tesla, right? AMD, NVIDIA, right? And also American micro devices, this company. And also GME. GME was just the most extreme version of this, but I think AMC can really show how extreme it could get. But this is my opinion based on the math that I've seen.
I really like your perspective on this, man. The way that you're breaking it down is really fascinating because I haven't made this connection with Tesla. So guys, if you're not familiar with Tesla, I think that Tesla actually was a combination of a short gamma squeeze that had a little bit of an infinite feedback loop. Man, I never actually even thought about that. I mean, look at this, guys. If you look at Tesla back at the beginning of 2020, stock went down from $200 down to $73. And it had this slow and steady rise up to about $900. Their P/E ratio is outrageous. It's insane. It's insane. And as you talked about, Elon Musk, he puts out this crazy hit piece about how, Tesla's overvalued. People start shorting the stock, and it blows up. It goes up to $900 where it's trading at right now. And that's spot on the money, man. That's crazy. So the way that you're saying this is AMC will be sort of a repeat of Tesla, where it has this long drawn out game of gamma squeezes, shorts, options expiring in the money, shorts not quite covering yet, and it just keeps compounding and compounding. So let's hear your hypothesis on this. Do you think that AMC is going to be a process that takes as long as Tesla did to go from $70 up to $900? Do you think this is going to be a 6-month process, a 9-month process, a 1-year process? What's your time frame for this? What do you think the volatility is going to be? Because from what I'm reading with your hypothesis, if this is the same way that it plays out, the same as Tesla, it could be a process that takes a while unless it's an extremely crazy volatile move. What do you think?
Right. So let's cover both of them. Right. So first, Fidelity, I believe, agrees with me, with their projection saying that hey, AMC could reach 900 by September. Right. So Fidelity does agree with me there. However, right, the Tesla wasn't shorted above 100%.
No. Right, man. Totally.
Yeah, no. Yeah, so the CEO came out right on the call, right? Says, hey, there are 450 shares, right, to the outstanding right now, but only 210 were issued to the public, which by definition means 210 or most of them were shorted, and then 240 of them were synthetic by the minimum, and they need to be covered. Right? We just don't know what timeline they need. Those 240 need to be bought back into real shares, and that's why you have a big fight between the DTC and CSE, like Securities Exchange Commission. So that is a whole political dynamic into themselves. But if we go back to your question, right? Straight to the math, whether it's going to be like GME or AMC, GME or Tesla. I think a combination of both, right? Because AMC has strong fundamentals, right? Even without the short squeeze, I think it's $100 stock because they're having deals with Netflix, they're having deals with Amazon, right? They're opening up back up. Things are getting back to normal. Vaccines are coming in, right? People will go back to the movies, right? It's part of American culture, so the AMC fundamentals are there. Unlike, Tesla's fundamentals are strong now too, but back in the day, not so much, right? They were a theoretical company. Right now, they're a solid blue chip company, but not back then. I think AMC is a stronger company because they've been tested in battle before, right? They've been at this for a while. So it is easily a valuable company. And so I think the price point is coming in regardless. But that being said, whether it's going to go, what's my timeline for this? This is a very, very hard question to ask. So I think it's going to squeeze so GME will squeeze first. That's my opinion, right? So I think GME will squeeze first, and then AMC will follow, right? Because you'll have a bunch of new apes with new millions, right? They want to double dip, right? They want to double dip, and AMC will be the game to go, right? So as we've established, I understand the subreddits get angry when you mention AMC in the GME Discord or GME in the AMC Discord, but that, as we've established, they're mathematically tethered, right? So they will want to double dip, and so as soon as GME squeezes, AMC also goes to the moon. Simple as that. It's just the timing is super hard to predict, like you said. We know it's going to happen. We just don't know when. But if I were to be super conservative, I'd say 5 months max.
5 months, huh?
So super conservative, right? Super conservative.
How about a liberal
DTC
answer?
Ruling. A liberal answer, I think next month, April 19th, probably.
Okay, so let's break this down a little bit. Let's get into, because I don't like giving hard dates. I don't think that's the right thing to do for anybody. It's never the good thing to do. Do you think that the quadruple witching day, with all these call options expiring in the money, you've got future index options, index futures expiring in the money, do you think that's going to be the catalyst that gets the ball rolling down the hill, so you have this gamma squeeze potential that can get the ball rolling so that more options expire in the money, and it creates that feedback loop so that more people buy, more people hold, more people buy, more people hold, institutional, buyers come into the play, right? Let's talk about that a little bit.
Yeah, no, I definitely think in 19 is going to be a big day, but I just don't think it's going to be the biggest day people are expecting, right? Because think about it, it's public information, right? Which means the big bad guy here, Citadel, understands this. So I don't know how they've prepped, but if I was Citadel, I would try and prep hard, right? Try whatever I can, right? So we don't know, right? But I don't think 19 is going to be the end. It's definitely going to be the start, right? It's definitely going to be the start, and we'll see how GME plays because, like it or not, these two stocks are correlated, right?
Totally.
Whenever AMC goes up, whenever GME goes up, AMC will go up. That's just how it is, right? Whether it's a 1-to-1 or like a 2-to-1, like we saw, like so far, right? The dips have been 2-to-1 for GME, not instead of 1-to-1. When GME goes up 20%, AMC goes up 10%. Right, that's what we've seen so far, right? Because of the prior answer, too much liquidity. But yeah, I think 19 will be big, but it won't be the end. It's gonna kick the ball. It's gonna kickstart it, right? To GME going to 500K, and AMC going to 202K. But this is gonna be a long drawn out fight, people. Don't get me wrong. They will not go down without a fight. They will not try to cover. They will. The only way we win this, in my belief, is if they get margin called.
And you think that is going to end up happening with that new DTCC rule, right? Because that essentially causes these hedge funds to not be backed for a bailout.
Yeah, exactly. So why don't we think about it, right? So the macroeconomic implications of a GME AMC millionaire class being created, right? People are going to have money. The capital gains tax is going to be insane. We could wipe out the majority of the national debt like overnight, basically. And that's why you have institutional buyers like BlackRock who control the White House. All their economic advisors are BlackRock, right? They're on board with AMC and GME. They can wipe out the national debt, right? They want the squeeze to happen, right? And furthermore, the only institution that loses in this are AMC and GME short sellers, particularly Citadel. And henceforth, the CEO of that was so nervous in the SEC hearing.
Let's backtrack a little bit. Sorry to interrupt you.
Yeah.
Let's talk about wiping out the national debt. BlackRock and Vanguard both own 9.2 million shares of GameStop, 6.2 million shares of AMC, 5 million shares of GameStop, and 7 million shares of AMC. Wipe out the national debt. Holy freaking crap. That's do you think that's feasible? Do you think that's going to happen?
I'm giving you the math. Well, why don't we walk through the math?
Let's do it,
so 33K. Yeah, so at 33K, GM is valued at 2.17 trillion, right? That's bigger than Apple. So if we do a quick 10 times multiplication at 300K, right? That's 20 trillion. There's no way shorts can cover this, right? Now, if it goes to 500K, that's a 1.5 times multiplier. Chat, correct me, but I think that would be around not 40 trill, but like around 33 trill, right?
That's a lot of
the
money,
national
man.
debt. Yeah, so I'm just giving you pure mathematics here.
Right.
Pure mathematics. Somebody correct me on that, right? With the exact numbers. But I'm going off like paper math, where it's like 33 trill. Why don't we say, even a fraction of that goes into, GME or AMC apes, right? What's the national debt right now? Like the budget deficit. Is it 4 trill or 5 trill?
The national debt.
Somewhere around there. Yeah, so national debt. Why don't we just Google that real quick?
I'll just pull it up right now on the live stream. So the U.S. national debt clock in real time. U.S. national debt is sitting at 28 trillion.
Right. I'm talking about the budget deficit specifically because that's everybody combined, right?
The U.S. federal budget deficit is millions, billions, 3.2 trillion.
Bingo. They'd wipe it out. They'd wipe it out overnight. because the capital gains tax is 37%, right?
Right, yeah.
So even if a fraction of that, even if 10% of that goes to apes, right, as taxes, they wipe it out. So, and BlackRock is the economic advisor for the Biden administration, which means mathematically, using this GME, they'd be able to wipe out the national debt and we'd be peachy. Biden would be the most popular president in American history, and that would be in his best interest, right? I don't know specific. Well, I think BlackRock has made that connection, but that's my personal opinion, right? But it's in their best interest to make the squeeze happen because the only person who loses is Citadel.
Yeah, right. And the hedge funds,
the AMC, GME. Yeah, that's the only people who lose.
So,
and now we take the ape factor, right? Let me
you're good, man.
So this is where we get. Yeah, so this is where we get into 10K. Now that apes have money, they're going to want to multiply that money. Guess which candidate's sitting at 2K at that point?
AMC, yeah, right.
Bingo. So that's where the actual lunacy begins. And at that point, I haven't worked out all the mathematics yet, but 10K is not unfeasible, right?
Because it's an endless feedback loop. It just comes down to what the people think it's worth.
Yeah, exactly. And if apes buy and hold as they've been doing, this hits the moon. I guess people says, right? Public sentiment is this will hit the moon. So yeah, man. So that's go on.
No, you're good. So I like your perspective here. I think in order to hit $2,000, I'm just going to give you my feedback on it. I think this is legitimate. Like I read through all these numbers, and the numbers are insane, guys. I'll drop the link to this in the chat box if you want to check it out. But the numbers are crazy, and the big thing here is the utilization by all these ETFs and options. That the numbers there are crazy. So I covered this in a video here earlier today. But companies such as Citadel, the majority of their short positions are coming from derivatives or options, put calls, or puts, not put calls, but puts. And I'd say 70% of those are coming from put options, and then they're backdooring as well with these ETFs, which is a lot of data that's not being shown. It's being skewed. So you take all this information and read through the data. I took about an hour to read through all this. It's insanity. It's absolutely crazy. With all this in the back of our mind, what our friend here is saying is that it is impossible for them to cover right now and do it in a way that wouldn't cause an ultra super ridiculous gamma / short squeeze that would push the stock up to infinite potential right now. So what's the way that we can draw this out is by getting into this endless feedback loop, right? So you've got apes buy, which pushes more in the money call options to expire in the money, right? Which causes more people to buy call options, which causes more people to buy and hold. And it's an endless feedback loop of gamma squeezes, which will eventually trigger the short squeeze to happen. My question, and one that I've seen pop up in the chat a couple of times, is this. So if shorts can't cover their positions, do they go bankrupt, and who pays for these shorts? Let's talk about that.
All right. So basically, the DTC kicks in, right? So somebody fact check me, but I understand they have somewhere between $67 trillion to a quadrillion in short. I don't know the exact number. I've been hearing 67 to a quadrillion thrown around. I haven't confirmed it myself, but feel free to correct me, Chad. But that's where that kicks in, because if you go bankrupt, that means your collateral has to be covered by your insurance. And that's what the DTC comes in. It comes out of their pocket. And that's why they want to force the short squeeze ASAP, because they'll be on the hook if this hits the insanity. Like that 20 trill for GME, it comes out of their pocket. And then the next one for AMC also comes out of their pocket, right? So that's why you see them effectively going, hey, no, you got to cover now, right? And then the SEC goes in, and I don't know the politics behind it, because there's obviously Citadel obviously has people in there, BlackRock also has people in there, but that's why there's a fight going on, I believe, right now at the SEC, where Biden's trying to get a new person in, so they could cause a short squeeze immediately. That's just my personal opinion. I haven't gotten concrete proof on it yet, because concrete proof takes a couple of days to, make sure I'm not insane. I'm seeing this. But that's my personal hypothesis from everything I've seen so far, because it makes sense, because the DTC said, hey, you got to cover now. But then everyone starts reporting it. FUD goes around that, hey, they got to cover now. And then they don't cover, people sell, right? And they think the short squeeze is done. But no. Right now, I believe there's a political fight going on between the DTC, SEC, and the White House via BlackRock to get this squeeze done. So the DTC and the White House, I believe, are on the same page, because BlackRock are all Biden's economic advisors, right?
Right.
So, and the SEC, I think, the only way I would say the reason why they would delay it is if Citadel has friends in there. And that's why we need to get AOC on this, to get this transparency, whether or not there's a true conflict of interest there, right? And because for the SEC to delay this, right, we've talked about the feedback loop on the infinite squeeze, but we haven't talked about the feedback loop of short interest, where this thing keeps on compounding the longer the short squeeze is delayed.
Right, man.
That's what they don't get.
Right.
Right. The longer this thing consolidates at new floors, the longer
the farther it can go. You're totally right. The more rocket fuel that's being added to the rocket. That's basically what it is. Do you mind if I interject something? I think this is important to talk about. You hit it on the head. So what's nice about AMC's price action right now that I really like in comparison to that mini gamma squeeze that we saw when it hit $25 is this has been healthy growth. It's a slow squeeze of the lemon. We're slowly driving up the price action and putting pressure on these short positions, right? And that's huge, because what's going on is it's with healthy price action, you don't typically have as unhealthy of corrections. So the run up has been really nice and smooth and slow, which doesn't scare away investors. As there's nothing I want to, like when I'm buying into a stock, there's nothing that sucks more than buying when it's just ripping up and down, up and down, up and down. The healthy price action is more likely to attract retail investors. Institutional investors, I think, are going to step into this no matter what. But you're spot on the money, man, by saying that this slow burn is good. And it's just adding to the case, adding to the FUD, adding to the likelihood of these shorts having to cover their positions down the road. This is healthy. I have never been more bullish on AMC than I am right now, man. You're spot on. You're spot on the money.
Yeah. But yeah, that's what I mean by there's so many factors going in. There's politics, there's economics, there's financials, there's backdoor dealings. Like there's so much, and apes control the price here. That's what's beautiful about this, right? Apes set the price.
Right.
If apes want 2K, ape will get 2K.
Okay.
So yeah, and that's what I meant by this being just a floor, right? This is the floor that I can prove. That's why I'm saying 2K.
Totally, man.
This is what I can. Yeah, that's what I can mathematically prove. So
I think an important thing to disclose when we talk about this is that we're not expecting this to hit $2,000 in a week. You're making this connection to Tesla, and I want to double down on that conviction. So what he's talking about Tesla is this. Tesla, once upon a time, Elon Musk put out a tweet saying, I don't understand why Tesla is worth so much money. Stock tanks. Hedge funds thought it was an opportunity to short the stock. And then you've got people like Kathy Woods and ARK Invest who went extremely bullish on Tesla, doubled down on their positions, drove it all the way up to where its peak was at $900, which caused this super ultra ridiculous gamma and short squeeze over the period of a couple of months, right? And that's what you're seeing as an opportunity or a theory with, I should say hypothesis with AMC is the same thing could theoretically happen. Where you've got this ridiculously long gamma squeeze, insane trader sentiment, insane options that expire in the money because of all these outside factors coming from the ETFs, coming from the call options that expire in the money, coming from these backdoor naked shorts, these failure to delivers, right? This all these different compounding effects that could play into a drawn out experience. So from what I'm gathering, my hypothesis is AMC, if you really want to truly experience the true run-up, the potential of the stock could take some time to play out. It could. I'm not saying it's going to take a year. I don't think that you are either. But I am saying that I wouldn't expect it to be done in a week. We need to play this week by week and watch the price action. You'll be able to feel it out from there. What are your thoughts on that, man? Let's go back to you.
Okay, could you repeat that? I was just looking at the chat because I mentioned AOC and it's getting political. Guys, let's take politics out of this. This is just facts, right? That she's, yeah. So I was just looking at the chat, and they're saying, "Hey, AOC, this guy's lost his mind. Like, ignore the politics here. She's just the one spreading the message here. The more publicity we get on this, the better. So ignore all the politics here, right? So we are just apes. We're just buying and holding. Mathematically, this is 2K, but that's just my opinion. Now, could you repeat your question real quick?
Yeah, so it wasn't much of a question. I was more so connecting dots. I was saying that Tesla, you're comparing AMC's squeeze potential to Tesla, right? Because Tesla, when it squoze, it was a drawn out period, right? You had this run up from what would have been about $70 up to $900, which was a combination of, I would say, call options that repeatedly got stuck in this feedback loop of expiring in the money, and then short positions that were established because Daddy Elon decided to badmouth his own company, and it got shorted by hedge funds. Who knows if that was legitimate, if it was planned? I don't really know. I don't think anybody could tell you that. However, that's kind of the connection we're making, is that AMC could do the same thing. The con here, what's the con?
Exactly.
AMC is now worth the same as Tesla is, right? So people were, hypothetically speaking, investing in Tesla for the future prospect of value. However, AMC's future prospect of value, the sentiment towards the stock is decided by the people who are purchasing it. So that's where you can make this connection, because people bought into Tesla because they think XYZ is the reason why it's worth this much money. People buying into AMC because they think XYZ is why it's worth this much money, right? They don't need to be connected. They don't need to be the same prospects. It's not about qualitative analysis or quantitative per se, but more so qualitative, right? Who's buying it? Why are they buying it? We want to think about those psychological factors and how long this could drag out. So I wanted to connect those dots, man, because I thought that was an important point that you made to give a different timeline for people. One last thing, if you guys would not mind dropping a like on the video, this helps the YouTube algorithm, it helps get this live stream into the eyes of different people so they can see it. I'll tell you what, we get this to 3K, we will put down a crack of the Kraken, take a little cheers and a toast to our friend here and every gorilla in the chat that is watching this right now. Drop some gorillas in the chat. Absolutely appreciate everybody here. Back to you, my man, r/umu68.
Right, so let's go ahead and address the Tesla point. Like you said, people were investing in the long-term future prospect of Tesla, And people might not do that with AMC because they believe it's a dead cat. I don't think so, no. I think that AMC is embedded into American culture, right? And when it was a 550, right, people were speculating it might be bought up by Netflix or Amazon. And I have a DD on this coming up. I'm just working through all the math on this one. It's just okay. So let's walk through the Netflix case, right? So Netflix is a entertainment production superstar right now, right? So if they were to get a hold of AMC, right, it would be a huge value added for them, right? Right?
Totally.
So yeah, so they would have the largest American theater chain for distribution for their movies. AMC shareholders in that hypothetical case would be rewarded handsomely, right? And their bet would immediately pay off, right? And I'm going to work on a DD on this one. And same with Amazon. So with Amazon, we've seen this before. They've taken out Whole Foods, right? Prior to the Amazon deal, Whole Foods was struggling, right? They were losing market share. They were regional, not national, right? And they didn't have access to data, right? Amazon came in, swooped in. They compensated the shareholders with immense value, right? And the Amazon institutional buyers have already bought into AMC, if I recall, on Market Beat or Market Watch. It's either one of the two. You could just go ahead and fact check.
I've seen that as well. I've shared that on my Twitter.
So I'll have the DD coming up in a couple days, obviously. But going back to your point on what is the value of Amazon AMC and why should people buy in, right? So and then going back to Whole Foods, right? So what we saw with Whole Foods is they went through a little mini financial revolution where they were able to get back market share. They put everybody else that was competing against them, right, in the doghouse financially, right? And they got access to the internet and Amazon's customer base, which is basically unlimited liquidity to them, right? So they have insane liquidity to experiment with what they can and can't do now. If Amazon buys AMC, they will have the same potential. So imagine if Amazon goes ahead and turns AMC into like a 5-star restaurant where you go there, yeah, movies are a thing, but you can also grab food, have some family time, right? Because AMC, by very definition, is family, friends, and entertainment. That's their product, right? That's what they sell. They sell bonding time. They sell family time. You go on a date, you go to the movies, right? You want to spend some time with your families? A movie is a great time, right? So if Amazon would go ahead and try to add value to that, right? So you go to the movies, there's a 5-star restaurant right on the next aisle, right? Amazon restaurants, whatever, right? So the growth potential for this is insane, right? And it's at such a low price point right now. So that's just as a speculative value of what they could do, right? And then why don't we cover just AMC going it alone, right? So if it does get to those insane valuations with the feedback loop, let's chuck 2K out of the window, right? Let's say it gets to 100, right? They can do a cash offering and then they can start financing themselves to do the experimentation, right? They'd easily be the most valuable theater chain at that point, right? And they could continually add value even without the short squeeze, right? Which would also feed back into more and more options expiring in the money, which would feed back into the Tesla feedback loop in the hypothesis case. Obviously, there are a lot of speculative cases where AMC could add value and therefore add value to the positions of their shareholders. But I believe all those paths end up with the shareholder winning. So that, and by that definition, feeding back into the feedback loop.
Man, I said this previously when we chatted in the Discord, but I gotta stop you for a second because every time I hear you talk, it just reminds me of my dad. You sound just like my dad, who passed away 5 years ago. This is like a slice of home, man. It's nice to talk with you. I just wanted to throw that out there.
It's all good. It's all good, man. Yeah, thanks for that.
Yeah, of course. So I think it's important to talk about this AMC or Amazon or AMC or Netflix acquisition. That's definitely a good thing to chat about. Which do you think is more likely? I'll tell you what I think. I think that the Amazon acquisition is more likely based on the institutional investors that bought into both AMC and Amazon on February 12th and the 13th. You had 5 companies that bought in on the exact same day. I've got this somewhere on my Twitter where I have a screenshot of both of these, both of the companies who were purchased by specific institutional buyers, and I think that's interesting. So what's your take?
Repeat that. I can't see the screenshot on my screen yet.
No, you're good. I was saying, which do you think is more likely to have happened? Do you think that it's more likely to have an AMC Amazon acquisition or an AMC Netflix acquisition? And then let's talk about the 500 million share dilution that people are worried about with that Class A shares. Because I remember that we talked about this previously one day.
Right.
I said that, it seems like a thing that a company would do when a company is getting ready for an acquisition, right? If they wanted that company who's purchasing them to have a major share stake in the company. So hypothetically speaking, if there's only 370 million share float and they want to purchase into it, but almost all those shares are being held, well, they can't have a major stake in the company for voting rights. So let's just dig into that a little bit. What do you think about that possibility? And I'll see if I can find that that deal on my Twitter.
Yeah. So based on everything I've seen so far, I think Amazon is more likely to buy AMC than Netflix. But for Netflix to miss this would be a missed opportunity of a lifetime, because they could cement their movie greatness for years to come, right? They could take out their biggest competition, Disney, right? Disney doesn't have their own theater chain. Netflix will, right?
Okay.
So this is a no-brainer in my opinion for Netflix, because if they can buy in this price point, right, they're good to go. And furthermore, that 50 million share dilution, we don't let's go back to voting rights. Class A shares don't matter for voting rights. Class B do. Class Bs don't dilute the shares.
But I don't think AMC has Class B shares anymore. Did they get rid of those?
No. Wanda converted them from Class B to Class
A. Right.
Yeah. So they still hold voting rights because I think they hold majority, right? But Wanda converted them because they're expecting a squeeze, right? And that's why you have all the media saying, "Hey, Wanda sold out." No, they didn't. They literally converted their Class B to Class A, and they're getting ready for the squeeze. So that's what's going on. They did, yeah. And furthermore, since there have been more share dilution via synthetic shares, they're reporting that Wanda's position decreased. I mean, yeah, but they didn't increase it. The short sellers did.
Right. Yeah.
So Wanda's holding, my dude. As for the 50 million shares dilution, okay, so I haven't researched as in depth as I would like to on that one, right? Because it factors into the DTC, the AMC, the whole political fight I was mentioning, right? So that's going on. So I don't personally think this is a bad.
I think you cut out, man. You want to say it again?
Thing. This is going to be.
I think we're losing you. I think your internet cut out. You want to say that again?
Yeah, those 50 million shares are going to be. So those 50 million shares, if they do appear. Okay, testing.
You're good now.
Testing.
You're good.
Okay, gotcha. So basically, right, so what I was saying is I think those 50 million shares in the legality, the media has been reporting 50 mil, but we don't know whether it's Class B or Class A yet.
The 500
If it's Class B, then your hypothesis for 50 mil.
Okay, got you.
My bad on that, guys. Yeah, 50 mil. Those 50 mil shares, right, that AMC is talking about, I don't think they're there to dilute the Class A stock. I think they're there to give voting power to an institutional buyer, like you said. Right? So, and even then, the board still has to go ahead. So they could just go ahead and count the shares, force the squeeze, and not add anything after. Right? That's why I encourage people to go through the legal document. Not believe anything on the media. Not to believe anything on Twitter. Go through the document yourselves or have your lawyer go through it so they can make good sense of it.
That makes total sense, man. I think that's a definitely important thing to talk about is why would the company do that, right? So people just automatically jump to the worst case scenario here. Oh, man, they're going to be diluting the shares, which obviously doesn't make sense unless they have a plan for it. Why would they be doing that? That's the question. You always want to ask why when you see something, because it's in their best interest to help the company. They're not trying to bankrupt the company. There's got to be a reason for why they would want to do that. And I actually think it's really interesting what you talked about with that Netflix situation, because Disney, maybe not so much in the sense of taking over the monopoly of Disney, but I would say the streaming of Disney, right? Disney having their streaming services, focusing on Disney movies. You'd mentioned they don't have a movie theater chain, which is actually really fascinating because I've never thought of that. I don't know if they'd ever get into that, but for Netflix to acquire AMC, they would have that leg up where they could stream different movies from AMC on their Netflix services. That seems really interesting. And then you're looking at a scenario where you could hypothetically have AMC worth $100 to $200 without apes as the third party in the Bulls and the Bears Bulls and Bears formula.
Mm-hmm. Yeah, exactly. Yeah, absolutely. Yeah, so even without the 2K hypothesis, right, we're looking at bullish accumulation coming in each new consolidation floor, and that's why we've seen over 3 weeks, right? 550, 801. That's a famous fight, right? 801.
Right, yeah.
Then it goes to 1110, and then before the flash crash, we were at like 1290. So, like, somebody fact check me. 1290 or something like that. Yeah. So we were close. Technically, right, there's a huge gap between 12 and 15, right, if my understanding is correct.
Yeah, you'd be spot on. So I'll just pull up the charts here and show everybody the 3 month. It'll lag a little bit for you.
Yeah.
But what we've got here is we've got a double top between what would look like a little over $12. So it would be about $12.20. And then from there, there's a gap up to about $16 to $18. So 17 for sure. You've got one top at about 14.5, but that's nothing compared to the the $17 price target. And then from 17 up, that's a big gap. So once we close over $20, it's free game, free chicken, man, as we would say in my line of work.
Free tendies.
Free tendies, dude. That's good. That's good. I like that. Good correction.
Yeah. But yeah, that's basically my opinions, man. Why don't we go with the free flow, man? Free flowing convo, Joe Rogan style.
Yeah, there we go, man. Okay, so moving from here, let's go into I put out a video on this just a little while ago. I want to talk about the Citadel situation. So we briefly touched on this a little while ago. It's this DD that was posted saying Citadel has no clothes. So before we get into this, I want to just touch on, any last things that you have to say regarding the 2K price target. Is there any last things that you have in that DD that you'd like to touch on? Any last words on that? You feel free to go with whatever you have left to say about that.
So the last thing I'll say about that is it's the core hypothesis of the thesis, right? The core assumption it's making is that apes buy and hold, right? So it's really up to the people here. If people want 2K, they will have 2K. This is going to be the largest crowd experiment in human history, right? GM and AMC, in terms of just pure game theory, whether people will buy and hold and trust the other person to buy and hold, right? I personally believe in the internet. I personally believe in the people. And I believe that people will get this to 2K. But this is an experiment to be seen. I'll be looking forward to see the results.
I'm with you, man. I'm with you. It's entirely dependent on the people and where they want to bring it. I think the last thing that I think everybody's worried about is the paper hands, the quote unquote paper hands. What's going to happen if we have people that sell out on the way up to $100, right? And let's just hypothetically say it is going to hit 2,000. What will happen if we get, even if it's just 1 or 2% of the current people that are holding the public float who sell out at $100? Is that going to affect the squeeze in your opinion? What do you think is going to go down?
No, I don't think so, because at that point there's going to be too many options in the money, right? Mathematically, they'll just be swapped out, and we'll hit a consolidation.
Right. Oh, totally.
So if people want to cover their original investment at 100, that's totally good, right? You have an effective space suit for your rocket ship now, in case the rocket ship ever crashes. That's fine. That's totally good. But in that case, the options in the money would just get on swapped out, right? And we'll just hit another consolidation. And if people buy and hold, then the rocket ship goes on, right? So So a good source for all of this would probably be the AMC Discord, right? So I think that would help with a lot of people. Because there's a lot of DD there, right?
Right.
So just to keep people updated and stuff. So that might help. We'll see what they think about it later on, though.
Right on, man.
So we're just yeah, we're just freestyling right now, right? So yeah.
So I think the last thing I want to touch on regarding that whole situation is the paper hands. And then I want to move on to the Citadel thing, because I think this would be interesting to talk with you about. So paper hands per se, it is up to you guys entirely on when you want to sell out. I am not pulling the trigger for you guys. Me and my friend right here, we're just talking about the potential, right? But it's up to you. If you've put money into AMC or GameStop that you can't afford to lose, you need to pay your bills, feed yourself, keep the roof over your head, right? It is up to you to pull the trigger, and there's no shame in when you decide to sell out. I'll tell you myself that I do not plan on selling out until at least $1,000 unless there's a reason for me to believe otherwise regarding data and information that is presented to me. I am playing this based solely off of the numbers and the sentiment and the media reaction, and from that I am going to be reacting to the situation. So that's my game plan right now. That's what we're talking about, but you guys pull the trigger, so there's no shame in whatever you guys decide to do. So that's the last thing I wanted to say on that.
Yeah.
And well, go ahead, man.
Yeah. So just to add on, when the GameStop thing was going on, Jordan Belfort, one of Fox Business, said, hey, he was warning people, like, hey, don't risk your house, don't risk your mortgage, don't risk your kids' tuitions on this, right? Make a little money, play, and then pull up your original investment, right? And then play with the house's money, right? That way, the worst you could do is to make a little profit. The worst that could happen. So I really do encourage people to maybe, once it hits 200, once it hits 1,000, right, to take out their original investment and then play with the house money, right? That way you guys can sleep free, right? You guys can sleep easy, that knowing that you guys are safe, right? So that's what I would encourage once it reaches that threshold, right? But then again, these critical points at 20, 40, 80, and 200 are totally up to you guys, whether you want to squeeze it or not. This is up to the people, right? Well, me and Trey have literally no power here, other than giving you guys information.
It's the apes together strong theory, man. By myself, I could dump $1 million in AMC and it wouldn't do a freaking thing. It's a collective group. It's the masses.
Yeah, it's up to the people here.
Totally.
So this is why the media is targeting. Yeah, that's why why the media is targeting fear, uncertainty, and doubt. Just like 2008.
FUD, baby.
Right? This is 2008. Yeah. FUD. So yeah, I think this is a grand slam, but this is up to you guys, for you guys to decide.
Cowabunga it is, man. You know what it is. All right, we're going to dig into the Citadel has no close. Do you have that pulled up for yourself?
Yeah, I have it right now, yeah.
Okay, so before we get...
I think there's a bit of lag, like 2-second lag, but I think that's fine, yeah.
Cool, rock on. I'll kind of give you the breakdown what I think about it, but before we get into it, I just want to remind everybody that if you are watching right now, you enjoy this live stream, you drop a like on this. I said it before, we get this to 3,000 likes, we will down a little bit of crack in here. We'll take a toast to the community, to the Gorilla Gang, and I want to thank everybody so much for listening to my friend here. We're going to be chatting for a while. His Reddit username is r/umu68. He does post DDs quite regularly. He backs them up with math, right? We're just giving you the basic rundown. If you want to see all this stuff, I have dropped the link to his DD in the chat bar. I will do it here again in case you would like to check that out, and I will be posting this in the description box. So absolutely awesome, dude. It's seriously great to be able to have this conversation with you. I love that you're spreading some knowledge. You've spent over 10 hours, right, on this one DD alone. Is that what I remember?
I think it took me around a good week, to be honest. I think 48 hours of just straight data.
Yeah, man. Because the numbers are numbers.
I started researching this. Yeah, I started researching this on March 1st, and then I got the Fintel thing on March 2nd, and cross-reference on Ortex on the 3rd, and then the main DDs came on the 5th, and I published it on the 7th, I think. So,
Cowabunga it is, man. Sweet.
I think that's how it is. Yeah.
There we go.
But yeah, this was to help people mostly. So yeah.
That's what it's all about, man. It's just the little guy helping the little guy.
Yeah.
Sweet. Well, we got to 3K likes, so I'm going to down this real quick, and then we're going to dig into this this little piece that we've got right here on Citadel. But thank you guys so much for tuning into this. This is a cheers to our friend over here, r/umu68. Thank you so much for coming on the stream. Thank you for the awesome DD, for doing all this number crunching, for all the apes out there, all the freaking gorillas. Drop some gorillas in the chat for our great friend here for doing that. Bottoms up to you, my dude. Appreciate you immensely.
Thanks, guys. Thanks.
All right.
Cool.
So let's dig into Citadel. Citadel has no close. And when I talked to you earlier, you said that you hadn't dug into this too much, but we're going to give everybody the basic rundown on this. I had talked about it in a video that I posted. If you want to check that out, It is on my channel. I've got it up a little while ago. AMC Citadel has no close, breaking down the AMC Reddit DD and market manipulation by hedge funds. This is fascinating stuff. And I want to talk about the major numbers and get your opinion on this. So I'm going to dive into a couple things that I think are important. Just cherry picking a little bit. Not necessarily the points, but cherry picking the important points. So let's start off with this. The Citadel Securities has been fined 58 times for violating FINRA, Reg Show, and SEC regulations. Holy crap. This ties into what we've talked about before, which is if they get caught with a naked short, they get slapped with a fine per share naked. Let's talk about this.
Right. So let's talk about the legal documents I found, right? So I'm still going through the legal documents. But I sent this to you over on Discord right before we started our call, if I recall. So, right, so Goldman Sachs was fined $7.5 billion for naked shorting. Which that basically boiled down to was 14,000 US, and I sent you the article over so people can just dissect through it, right? 14,000 US dollars per naked share, right?
Right.
And then when we went through each securities regulation, which also backed up around 5,312 per naked share, that boiled down to it, right? So yeah, my dude, like it's either they pay those fines for those 240 million naked shares or cover. Like either option is suicide.
Right. And the problem is if they pay for the fines for those shares, it'd be more than if they just covered if it went to like $1,000 or $2,000.
Yeah, it would be. Yeah, it would be. Right.
And I think it's important to talk about this 58 times being fined by FINRA, Reg Show, and SEC because it shows that Citadel Securities doesn't care. And it's not just Citadel that does this. I mean, somewhere in this DD, they talk about other companies who've gotten slapped with that. And it's a crap ton of different firms. I mean, we look here, it was Citadel has done it. We've got Merrill Lynch, Goldman Sachs, Knight Capital, Latour Trading, Wedbush, Morgan Stanley, Peaky Weeky over here at Morgan Stanley for a $4 million slap on the wrist, right? We know these hedge funds are willing to do that instead of coming out and saying, hey, we broke the law.
I don't think so, not this time. Because the magnitude of naked selling is so much more different. Right? Like those fines would immediately bankrupt them with them not being able to buy back anything. Right? At least with those shares, they could try and ride the wave and try and make their money back or whatever, right?
Right.
Once those fines go through, they're done. They're done. There's no way they can come out of this. Due to the fines, right?
Totally.
So I've sent you guys the legal documents, right? You guys should definitely. Well, I sent Trey them, right? You guys should definitely. If we could get like legal here, right? He's like a legal YouTuber, right?
What's his name?
I like to follow that. Really? Yeah, legal. I'll send you the detail. I'll send you the.
Yeah, send it to me real quick. Legal Eagle, huh?
Yeah, so he does a lot of law.
Oh, this would be huge.
Yeah, if we could get him on this, right, and have him go through the legal paperwork for the fines, we can get like an accurate number.
I am 100% sending this guy an email.
Yeah.
This is for business inquiries only, guys. Don't send him an email unless you're going to... Don't blow him up. Don't blow him up. This is regular information. I'm not exposing anything, but don't send this guy an email unless you are going to email him for business only.
Yeah, so if he can get on this, right, and he can dissect this legally, right? So no Twitter rumors, no Reddit rumors, no FUD, right? Just the pure law and just, the pure legal document and the pure number for the fines. I think we can clarify whether them covering per naked share would be more expensive than them just, giving us our tendies, right? So, yeah.
Good point, man. I'm glad you brought that up. That's definitely a good thing that we could bring to the table. I think it'd be interesting to talk with somebody that knows good legal jargon. So I am definitely going to shoot this guy an email and see if we can make something happen. I've got it. I've got his email on another channel, or I should say a tab over here on my internet browser. So that is great. I'm glad that I'm going to throw him a sub, man. All about supporting people. Dude, good stuff.
Yeah.
Okay, good to know.
That's fine.
So coming back into this, Citadel has no close. So that was huge. The 58 times that they got fined, absolutely massive. Next thing that I want to talk about is options, right? So options are a huge way that Citadel has been shorting stocks. So to know how much they're shorting and put it in a huge perspective, we need to look at how much they've gone short on positions. So to start off with, right, if we just scroll up and look at what they have done so far. In 2000... What is the year on this? It usually says 2019. They were short $25.2 billion. Well, in 2020, they were short $57.5 billion. Security sold, not yet purchased at fair value, is fancy jargon for sold short. However, what's something that's interesting is out of that $57.5 billion sold short, how much of it was in derivative liabilities or options? $32 billion. That's insane. That's insanely high. $32 billion is like 70% of the total short positions that they hold. And if you think about how freaking crazy that is, think about this, man. Would you in all your days have 70% of your portfolio be a call or put option? I'll tell you, I wouldn't personally.
No, that's insanely risky. And this is where like Jake Tran goes, where these hedge funds, they don't really try and predict the market anymore. They try and engineer it, right? They really because think about it, right? Hedge funds are only available to accredited investors, which means basically you have to have more than $100 million to invest in these guys, right? So if you have more than $100 million, you want to know your investment secure. So what hedge funds do, and this is what Jordan Belfort was talking about on Fox News, right? Whereas like they go out they do private investigations, they really try and tank companies, try to drive them into the ground by short selling them, right? And then making those profits back, right? This was happening on GME, but people caught on to it. And here's where we are. So, yeah, that's how it is, man. That's my take on it, based on what I've heard from Jordan Belfort and stuff.
Dude, you're spot on, man. This is crazy. This is some crazy numbers. I think the biggest takeaway from the Citadel has no close thing, which is huge, is the amount of money they have in put options on this, or options in general. We don't know exactly how their split is. They could be going long on certain positions, short on certain positions. We don't know. But how much they're going short, how many fines that they've had, how many breaking of the regulations that they've had, 58 regulatory events, which is insane, and the fact that they've doubled down 127% of their total short positions from the year over year, which was their previous year. So 2020 was nuts, and I'm really interested to see what their losses were that were accrued in 2021. That's nuts. And this actually brings me to my next point. I think some people are a little bit worried about this, and I want to hear your opinion. Is what if you have short positions out there? Let's say that somebody went 1 million shares short, and they went short at $5. They kept that in their position. They went short again at $6. They went short again at $7. Again at $8. And they just realized that this is a futile cause. And instead they choose to go long. They decide to go long. And by doing so, they purchase call options that would make them go from short to long in their positions. And people are worried this is a way that people could be covering their short positions, which would wreck the chance of a squeeze per se. What's your take on that? What do you think that the actual chances of that are? Would that actually kill a short squeeze? Do you think it's actually happening?
Okay, so let's break that down. Let's go with call options. As we've established before, the call options add buying volume, right? Which would drive up the price even higher. But then technically they would have their margin calls. They would have effectively hedged their bets, but they'd still be net short. Which means if they go ahead and try and sell that asset off, which they would, right, to drive the price down, this is where we get those insane sell walls, right?
Right.
They would still stay net short, and if the price increases higher, they're even more in they dug themselves deeper into the ground because they've consolidated a new floor. And if they keep going long on this, right, the short positions that they've taken out after, because I'm assuming at 12 they take another short position, right, and then at 11 people are worried they can take a long, right. Those short positions are still there, and they're over leveraged. They're still in the deep. And this is why I said at $200, right, this is where stuff starts to get insane. Because I believe that's a trigger point, right? Right now, we're at $11. We're already seeing FUD. People are telling them to sell, right? If they were going long, they wouldn't try and convince apes to sell. They still think they can drive the stock down, which I don't think is possible at this point, right? And if they go long on this, they add more buying pressure, which adds new floors, which adds even more people that have confidence in the stock, and the feedback loop begins, right?
Right.
So either way, if they go long, right, either if they can go long and add more buying pressure, which would dig them either deeper on the hole, or they could double down on their shorts, which is a suicide to begin with, right? So either options are bad here. I don't think people should, really hesitate, like you worry that much. Well, I understand why people worry, right? Because fear, uncertainty, doubt. Can these guys get get out of it, right? But I personally think mathematically they can't, right?
Because they don't have the collateral to be able to exercise their in the money call options if they went in the money.
That's at 200. That's at 200, right? That's why I said at those insane levels they won't have enough collateral to exercise those money calls.
That's huge, man.
So yeah. That's why. But at that 20 point, that's if apes hold at 20, 25, and 80. That's when you'll see shit getting really insane.
Dude.
Oh, sorry, I swear.
You're out of here. Done. Canceled. No more than I'm playing. It's okay. I slipped an F-bomb on a live stream one time. It just it happens. No worries, man.
Yeah.
No sweat. It's funny because we talked about this before the stream started. I was like, dude, I know it's hard. It's hard for me too. My job, I tell you what, it's tough for me not to swear, but you're doing fine. It's all good. Cool, man. Rock on. Yeah, gotcha. Is there any last things that you want to talk about? Otherwise, we'll let you get on your way. Dude, you spread some absolute wealth of knowledge. Knowledge is power, man. Apes together, if we can just get access to this sort of information, which you were taking an incredible amount of time. Guys, I don't think you realize how crazy it is that we have this guy on the live stream. He is a very well-recognized Reddit user. So we're going to pull him up here. I'm not exposing his name or any sort of thing, but you have established quite a name for yourself on Reddit and typically keep pretty quiet. So it's incredible that you've taken the time to come on here.
Yeah, thanks, man. Yeah, I really appreciate it.
Dude, no, we appreciate you. Seriously, is there any other last things that you want to say regarding the situation here?
I mean, thanks, guys. Thanks for everything. Yeah. If you guys like my Reddit, post me a follow, and I'll once I get the long form bullish case for AMC, why this is a good case regardless. You guys will be the first to see it, I guess. But yeah, no, thank you for everything.
Dude, it's my pleasure. It's my pleasure to have you here. And we need to throw together another DD. You want to chat about it? We'll bring you on so you can spread the wealth of knowledge again. I think the biggest thing that we can do as apes is find some common ground. I think the only downside and what hedge funds are betting on here is that we, as the retail investor, the 99%, will not be able to come together and agree on something, right? That we will not be able to hold up. People are telling me that I misspelled your name, so it's R/U. Anyways, that we won't be able to agree on a common ground, right? And as apes, the thing that we can do the most is just come together and spread information and do the best that we can to show the knowledge, to show the numbers, how the numbers add up, the overall data, and you are doing the world a huge favor, man. I would say the United States, America, but it's the world, man. It's the entire world. You're doing the world a favor, and we appreciate you immensely.
Thank you.
For sure, brother. Well, it has been an absolute blast to have you on here. We'll let you get on with your day, and like I said, it was awesome to have you on. Everybody appreciates you immensely, and it's been a blast, man. We'll bring you back again for sure.
Totally. I'll look forward to it, man.
All right, dude. Take it easy, Stand Proud. It was great to have you here.
Okay, you too. See ya.
Peace.
Okay, peace.
All right, guys, that was freaking awesome. I hope that you guys enjoyed having Stand Proud on here, r/umu68. That was an absolutely awesome DD. If you guys want to dive into that, there is some incredible information on there. I don't think you guys realize how big of a Redditor he is. He's got a lot of following here. A lot of people pay attention to what he's got to say. That was a great opportunity to learn a lot of good things. So if you want to dive into the information, there is a lot of good facts and numbers regarding the ETFs, regarding call options expiring in the money, regarding the naked shorting, the failure to delivers, the FTDs, right? All these different things that pile on to this crazy connected dot sort of scenario where we've been trying to draw this up day by day to show everybody what's going on. And it has been monumental. So, dude, that was an absolute blast. It was great to have everybody here. We're going to wrap up this live stream. To everybody that dropped the super chat, I really do apologize that I wasn't able to read that. We did disclose at the beginning that we will not be able to read off these super chats as we do want to respect our guests. But guys, freaking awesome. That was an absolute blast. Thank you guys so much for tuning into this video. If you don't mind dropping a like on the way out, hitting that subscribe button if you want to watch more stuff like this. We do cover AMC every single freaking day, guys. Absolute blast. We will be doing that. So take it easy, my friends, my fellow apes. You already know what it is. The George W will be coming. We'll be cooking those tendies. We'll be eating those tendies. And the hedgies will not be stealing our tendies anytime soon. So I'm going to keep holding on. You guys keep hodling on if you'd like to. I'll catch you on the next one. Not a dead cat, baby. Not a dead cat. And peace.